What is up, good people? Welcome to the second video in the ICT Daily Profile series. In this video, we're going to be focusing on the New York Reversal Daily Profile. I hope the first video in this series was insightful and you enjoyed watching and learning, and I hope it'll be the same and more with this video. However, if you need me to go a bit more in depth regarding past videos and those that are still to come, please let me know. All I ask is that you like, share, comment, and subscribe. In this particular daily profile, the New York session is expected to give us the high or low of the day depending on the higher time frame bias or anticipated direction. Now, what is the New York Reversal Daily Profile? The New York Reversal Daily Profile usually forms when the London session has consolidated or has made an opposing run to the anticipated direction. For example, if the bias for the day is bullish, for the New York Reversal Daily Profile to occur, London session has to either consolidate and have New York session take the liquidity created during the consolidation, or London session can trade lower into a bullish PD array where New York session will start buying from. The opposite applies for a bearish scenario. Now, for the first example, we're going to be looking at Nasdaq on the 15-minute time frame. I want to emphasize the importance of having a daily bias because this will help you immensely in not taking incorrect trade setups, and I will use this example as an explanation. Now, let us assume that we had no daily bias and only wanted to use the Asian high or low as our liquidity levels where we'd want to see a liquidity sweep followed by a market structure shift or a change in the state of delivery. What we would have seen in this case is that, okay, the Asian session was taken before 2 a.m., which we don't consider. We then had a short-term high, which was taken after 2 a.m., followed by a market structure shift and another market structure shift, which had a fair value gap. We could have entered a sell in this fair value gap, and we wouldn't have been wrong if we just wanted a quick and out in and out in the market. But because we want to catch the expansion of the day, this wouldn't have worked for us. What we gotta do is to align our lower time frame narrative with our higher time frame bias. Using the same example on Nasdaq, here's the correct way to align predetermined bias and lower time frame narrative. Now, our bias for this example was bullish because we were aiming for this buy side liquidity level. In the smaller time frame, the ideal setup should form after sell side liquidity has been taken. To make it simple, I use the Asian session low as my sell side liquidity level at which I'd want to see a liquidity sweep followed by an indication that the market has changed its direction. On the 15-minute time frame, we can see that the Asian low was taken during the New York session, and then we had a market structure shift or a change in the state of delivery, which had a fair value gap as our entry point. The next example, we also had a bullish bias, and our draw on liquidity was this high in this dealing range. Now, diving into the 15-minute time frame, New York session swept London sessions low and then created a market structure shift or change in the state of delivery with a fair value gap as our entry point. For the third example, the liquidity pool was this daily low as our sell side liquidity level. We would in this case look for a selling setup after a sweep of buy side liquidity. On the 15-minute time frame, the Asian session high was purged in the later stages of the London session, after which we did not have a change in the state of delivery or a market structure shift. Now, because of this, New York session opened and took out London session's high right over here. In the very same example, I want us to dive into the 15-minute chart, where we can see that the London session's high was taken and we had a market structure shift or a change in the state of delivery with a fair value gap as our entry point. Now for the continuation setups, we also had this fair value gap which the market traded into and retested again and eventually sold. In the fourth example, our liquidity pool was this low, meaning we had a bearish bias and buy side liquidity has to be taken before we enter into any trades in the smaller time frame. On the 15-minute time frame, the Asian high was taken towards the end of the London session. When the New York session opened, it took out London session's high and proceeded to create a market structure shift with a fair value gap, which was our entry level. We have come to the end of today's video. Don't forget to like, share, comment, and subscribe. Thanks for watching.